Hey everybody, so in this video I'm going to be sharing with you the Toronto Regional Real Estate Board market update for July 2022. So let's have a look. The first screen that you're seeing here is the average price graph, and I put a trend line on there as well so that you can see that the recent decreases, and we're going to talk specifically about what those numbers are, the recent decreases and what everybody's calling a market correction really means that the prices have been lofty towards the previous, in the previous part of this year, January, February 2022, which was the peak, and are since returning to a more sustained level of growth. So in terms of where prices will go, now that it's come back to this trend line here, just a matter of seeing what the prices will do over the next couple of months. But first, let's look at the Treb Market Watch. And so in the Treb Market Watch, reported for July 2022 versus July 2021. Let's look at the year-over-year summary and make some sense out of these numbers. So you're seeing a decline of sales of 47.4%, which July being at 4,912 sales is historically low level of sales. I'll show you what that means in terms of the context of the overall sales numbers, but it is a very low number of sales. And relative to last year, of course, it is lower by almost about 50%. If you think about it, from 9,339 sales to just 4,900 sales, it is a significant difference in sales figures, and it's attributed to, of course, rising interest rates and just the sentiment of the buyers in terms of the market, inflation, world events going on. And so there's a couple of factors that are attributed to the lower sales. In terms of the number of new listings is sitting at 12,046 for July of 2022, which is a 4% decrease, which is not too bad. Now, in terms of new listings, keep in mind that there is a report that was released by the Toronto Regional Real Estate Board when it comes to cancel and relists. So what is happening with the number of new listings being stated here, it's actually overstated by about 40%, because whenever a realtor cancels and relists a listing, say for example a home that gets listed for sale doesn't sell, and the seller along with the realtor decide, let's take it off the market and put it back on as if it were a new listing, that's actually going towards the count of new listings. And so 12,046 listings that are brand new into the marketplace is 40% overstated. So you're really looking at only about, let's say, about 8,000 new listings coming into the market. When you're looking at active listings, it's sitting at 15,334, which is a jump of 57.6% over last year, July. Average price is at 1.2%. I'm going to show you where average prices seem to be going over the next couple of months. And then listing day on market and property days on market is increasing, essentially meaning properties are taking longer to sell on the market. Now, in terms of prices for 416,905 area for the various property types, you can see that here. So, and what we'll look at is the change. So in terms of detached homes year over year, when comparing July 2022 to 2021, in the 416 you're seeing a decline of 7.3% for detached homes, and in the 905 a decline of 1.9% for the average price. Semi-detached is an increase of 5.1% for the average price of semi, 2.2% in the 905 area. Townhouses have increased 7.6% and 5.5% increase in the 905, a 4.3% increase for condo in the 416, and 11.9% in the 905. Now that's the price comparison on a year-over-year basis for July. Now the month-to-month basis, it's actually decreasing, and I'm going to show you charts on that later on. In terms of sales, all across the board, you're seeing a decrease in sales from detached, semis, townhouses, and condos. Again, not surprising because of the effect of the rise in interest rates affecting borrowing costs, and all of the other world occurrences that are happening right now is affecting the buyer's confidence. So if you as a potential home buyer don't really have an optimistic outlook in terms of real estate, and you are anticipating that real estate prices could actually decrease or continue to decrease the way they are right now, you're either sitting on the sidelines waiting for something to change or something to happen that would bring you back into the market or you're just not buying. Pretty much you're just deciding, that maybe a move right now doesn't make sense. I'll continue renting, or I'll continue staying in the home that I currently live in. And so I'm going to jump to some of the figures here that are also going to be summarized in my other charts. When you're looking at the overall year, as of right now, we're sitting at 52,100 sales in total and an average price point of 1.239, and which is 13% average price increase. 12 to 13% over last year is where we're currently sitting at. And so let me just navigate over my screen here. Oops. There we go. So if you look at the average price, and I'm going to go to the last couple of figures here from January to July of 2022, this is where you see the price increasing. So anywhere from when the pandemic first started and we started reviewing these numbers from 2020, you're seeing double-digit year-over-year increases. And of course, when you're looking at on a month-to-month, there are slight decreases, but that's because of the seasonality of average price. But when you look at February 2022 here, which was the peak, and you're looking at it from February 2022 to today, you see a 19.44% decrease from the February 2022 prices. And on a month-to-month basis, you started to see declines since February, so March all the way to July. And for July 2022, you're seeing only a 1.23% increase versus last year July prices. So this is what that looks like when you're looking at it on a chart. So when you see the spike, if you will, of the prices away from the trend line, you start to see growth that was not like it was above normal or unusual price increases. And if you recall, this was driven by the pandemic. So there was a lockdown, of course, when the pandemic first started. It resulted in sales slowing down, but then sales started to pick up. And with the low interest rates coupled with low inventory, there's a lot of competition in the marketplace. So in January 2021 and early 2021, up until the point of you reach the end of the year, all of a sudden there was a spike from November, December 2021 to January, February, and March of this year. So February being the peak, and then started to decline in March. So you're looking at prices that have started to grow beyond normal sustainable levels. And that was, again, driven by the low cost of borrowing money, so low interest rates that, if you recall, they weren't being increased at that point. It's still very low, very competitive. And then you're looking at inventory, which was at historically low levels. And what you're getting is, what you got were buyers that were competing and bidding in multiple offers and just pretty much astronomically affecting those prices upwards. And when you look at it now on a seasonal basis, you can see that this peak February 2022 and then the eventual declines, we're now reaching a point where, let me just expand this graph here, where we might actually cross over in terms of the price on a year-to-year basis. And this is why July of this year versus last year, you only saw a 1% increase, and on a month-over-month basis, you were starting to see decreases. July 2021's average price was $1,061,000. July 2022 is $1,074,000. So it'll be interesting to see once the real estate board releases August numbers, what that average price will be. Now, on a normal basis, it should be above what the previous year's price was. But in this particular case, we're seeing the effects now of the July interest rate increase. The anticipated rate increase is coming up in the latter part of this year. And so if that doesn't change the way the consumers feel about the market or potential buyers feel about the market and the lack of confidence they have because of increased borrowing costs, you will see the price cross over and downward. So you'll actually start to see a year-over-year decrease in price. Now, should something happen, should something change in terms of the trajectory of where this current market is going, let's say, for example, rates don't get increased, which I highly doubt, but you never know. If anything were to happen to affect the trajectory of the market, then you'll see the average price kind of above what last year's figures was. But based on what we're seeing right now, there's a greater chance of the prices either being flat, which doesn't usually happen because there's always some sort of fluctuation in price, or it's going to cross over into negative territory and you'll start to see year over year decreases rather than increases. I'm not trying to make any predictions. I'm just basing it on just pure data and purely what's happening in the marketplace, as well as indicators in the marketplace that tell us where things may go. And if you're looking at the number of sales and basically tracking this figure, you see that there's been a huge decrease in the number of sales year over year. And a month over month basis, you're looking at a dip of about 24%. When you're looking at what 4,912 sales signify relative to other months of the year, you're seeing basically that you see levels of sales in the 5,000, 6,000 levels happening during winter time. So December 21, January 2022. In fact, when you're looking at December and January 2020 to 2021, the sales in December was 7,000, and mind you, that was during the pandemic, the first year of the pandemic year, so that was a little bit higher than the usual number of sales as well. And when you're looking at the previous years, December 2019 to 2020 January, you're looking at about 43 to 4,500 sales, and then December 2018 to January 2019, you're looking at under 4,000. So when you put things into context, the level of sales that we're seeing here at 4,900, in terms of compared to summer months, you're seeing in July 2021, we're at 9,000 sales. July 2020, 11,000 sales. Again, that was during the pandemic, so that was a bit of an anomaly. But typically, you should see around, like for example, July 2019, 8,500 sales, 6,900 in July 2018, July 2017, 5,800 sales. And then if you go all the way back to 2016, you remember that run up to the 2017 market peak. At that point, July 2016 was 9,900 sales, and then of course to 9,800, July 2015, July 2014, 9,100. So in terms of the summer months, we are seeing right now a 50% drop to normal levels of summer, which is a bit concerning. And we know what it's attributed to, of course, with the interest rates being increased, cost of borrowing being high, consumer confidence decreasing because of various world events, increase in inflation. There's a lot of things that are affecting the consumer's confidence, a buyer's confidence to enter into the market. And so here's what that looks like in terms of a chart. When you're looking at seasonal sales, this is where we're sitting right now. We are sitting below 2017, 18, 19, 20, and 2021. So if you notice, the sales, the way it flows on a year-to-year basis on a seasonality graph like this, is it does go up in terms of there's an increase typically in spring that you usually see happening with the increase in sales in the spring market. And the only exception for that recently was during the 2020 initial coronavirus and pandemic lockdowns and whatnot, because that's how the market changed at that point. Everybody was uncertain about what was going to happen. Nobody wanted people to come into their homes and have a look at their house, and so sales decreased. But that year, later on that year, it picked up the normal, somewhat normal level of sales. In fact, it's the highest amount of sales compared to 2021, 2019, 2018, 2017. And so what you're seeing now in 2022 is a drastic decrease in the number of sales compared to previous years. In terms of new listings, again, we talked about the cancel relist practice that realtors and their sellers do. And so we can't really rely on this figure being 100% accurate because it is overstated by about 40%. And so really you're looking at about 8,000 listings. But when you're looking at listings on a year-over-year basis, it is down. And on a month-to-month basis, it's down because summer months typically have fewer listings than the previous months before it. And definitely in the spring market, there are more listings than in the summer. But this is where we're sitting in terms of new listings right now. 12,000 new listings apparently, but really realistically, there's only really about 8,000. And when you're looking at new listings on a seasonal basis, you see somewhat of a similar pattern typically, where higher number of new listings enter the market in the spring market and then decrease for the summer. Then it goes back up again, but not passing the spring market levels in the fall, which is the second busiest market, before declining in December. Let's have a look at active listings. And active listings is going to give you sort of an indication as to, is our market really that bad? I mean, I know I say that very lightly, and it sounds like I'm kind of discounting what's going on out there in the marketplace, but what we're seeing right now in terms of active listings is we're still at relatively low levels. So when you look at the level of inventory here, June 2022 is sitting at 16,094 listings, July 15,335. The last times we were at that point of 15 to 16,000 active listings on the marketplace was August. So July and August, you're looking at 15,000 to 16,000. So that is pretty normal in terms of the amount of inventory that we saw in the summertime. And then, of course, it ended up decreasing when you looked at July and August of last year, and that was because of the increase in sales and resulting in inventory being taken off the market. But typically, when you're looking at July and August months, you're looking at, for example, in 2019, 16 to 18,000 listings sitting on the market between July and August, and then in 2018, 18 to 19, almost 20,000 in inventory. So if you look at where we are today, at just 15 to 16,000, we are lower than previous high peaks of active listings. And so what's really driving the prices what's really affecting the prices downwards is really affordability, right? There are listings on the marketplace, but there's not a significant number of listings. Now, relatively speaking, when you're looking at the recency of listings, yes, there are more active listings now than there were recently. But when you're looking at over the past, since 1996, right, 1996 April with 15,851 listings, that's sort of the level of listings we're sitting at right now. And that started to increase in the 2000s, 2001, 2, 3, 4, 5, all the way to the peak, October 2008, which we saw 28,000 active listings. You all remember the financial crisis that happened in the 2008 year. And then from that point on, we started to see a decline. So even at this bump up in terms of active listings on the marketplace, now sitting at 15,335 in July 2022, we haven't come back to the inventory level of 20,000 listings, for example, that's sitting on the marketplace. And so when you're looking at it on a seasonal basis, and this is what you see again in terms of active listings. Typically, we would see more listings active in the spring market, then a little bit of a dip in the summertime, which is normal. Then the second highs in terms of active listings, the second highest counts would be in the fall, and then another dip in the market in the winter months. And so let's jump to, I keep making a mistake with how to navigate through this, but just bear with me. So I'm going to show you now in terms of the context of average price since 1966. So when you look at 1966, and again, this particular graph is not adjusted for inflation, so you'd call it nominal figures. It's not adjusted for inflation whatsoever. So just take it for an indicator in terms of how the market is performing. So in 1966, when the average price was 21,000, all the way to today, where the average price is currently sitting at 1.239 million, with 13% year-over-year increase to date. What you're seeing on terms of the average price graph is here. It's growth, right? So when you're looking at price growth, and if you're concerned about where prices will be in the future, you just have to refer to this graph. And because real estate is tied to inflation, because of the cost of building real estate, and when you're looking at supply and demand factors, you see that in the long run, there is going to be an increase no matter what in real estate prices, just because of the cost of building properties and the demand for them is always going to increase with immigration, with constraints in terms of supply and building new developments. There's going to be a tight supply no matter what's happening in the marketplace in the long run. So to give you an example, even if developments start to build up or increase and more new homes are being built, the amount of immigration of immigrants coming into Canada with a demand for housing and the demand of existing residents of Canada that are looking for housing is going to be combined together and always result in a supply challenge, right? Because of the increasing demand. And so when we see the prices, when we see interest rates start to ease off or stabilize or even start to decrease at some point in the future, and that starts to stimulate demand, you're going to see prices continue to go up at that point again. And so when you're looking at it from a historical basis, the average increase, I can put average here, is 7.86%. The maximum increase has been 36.12%. So the most in a given year that real estate ever increased historically was 36%, and the most it's dropped in a year when you're looking at the year-to-year prices was 8.25%. And so I like to refer to this graph because it shows you, if you're really worried about where real estate prices will go, the number of up years versus the number of down years in real estate. So we're sitting here at 2022 with right now a 13% year over year increase. Last year was 17%, the year before that 13%, and then 3.97% in 2019. 2018 saw a dip of 4%, but that was after 2017, which saw a price increase of 12.7%. And so in terms of average price changes and the annual price change, you can count how many years since 1966 prices have actually gone down on a year-over-year basis. So 1, 2, 3, 4, 5, 6, 7. You're counting 7 years. Now, some of you are saying because this is not, this doesn't reflect on inflation, there will be some years here that would dip the average price into negative territory if you were to factor in inflation as part of it. Absolutely. By the same measure, you should be looking at as well the amount of increases you would have received even after inflation in terms of your property prices, or if you own investment properties. The number of up years would of course be affected as well by inflation. So you would subtract inflation from 13.2% this year and it would be a slightly lower figure. But when you're looking at the overall big picture of this, and if you were to kind of decide, are you going to be in the market or are you going to be out of the market? Chances are if you were in the market at any of these years, and if you held on to 4, 5, 10, 15 or 20 year period, you would have been ahead, no matter how you put it. And so I always like to bring up the example of my parents. My parents bought in the early 90s, and this was in a climate of decreasing prices and high interest rates. And so they sold their home, I believe, in 2020. Since they held on since the 1990s all the way to 2020, you see what kind of increase there was in terms of the overall price. Now, mind you, the property that they ended up buying also increased, but that's the whole point, and that's the whole nature of real estate, is that when you are buying and selling in the same market, whatever you've gained on, you're going to be buying another property that has also gained in price. Now, in this current market where prices are decreasing, whatever you're buying at a decreased price and whatever you're selling at a decreased price is relative. So if you live in a condo right now and your condo price has gone down, let's say 15%, and you're moving to the suburbs and your detached home that you're buying has gone down 20%, well, you've lost 15% on a lower priced property, and you're paying 20% on a high off or less on a higher priced property. And so you're buying and you're selling in the same market. You can sort of justify it, provided your budget makes sense and your financial picture is in order. What do I mean by that? Just because you are selling, let's say, at a 15% loss, but buying at a 20% decreased price, doesn't mean you can just buy any property you want. The finances still have to make sense. So when you're calculating your mortgage, when you're calculating how much you're going to be paying on a monthly basis, and when you're anticipating rate increases over the next coming months, you have to make sure that you can afford where you live in, right? So if you had bought a home in February 2022 and now prices have gone down, and I'm going to go through that chart momentarily, you're going to see that your down payment may have been eroded. But if you're looking at it from a long-term perspective, 5, 10 years, 15 years, or if you're looking at an intermediate move in between that time period, you may have an opportunity as long as you're building up equity. But the most important thing is you have to have, it has to make financial sense in terms of what you are buying. When you're looking at unit sales, in terms of the number of houses that have sold, so 52,100 to date in 2022. So this is where we're sitting at, slightly less than half of where we were last year. And so we may end up this year, if this pace continues, with 75 or 80,000 sales, maybe 90, if the fall market is active. But relatively speaking, we are coming off of high sales in 2021 of 121,000, and I believe that's been the record year, at least in the past decade and historically. So we haven't seen sales at those levels. And so I'm going to bring you now to this particular chart, which shows the Greater Toronto Area regional home average and median price changes. So I'm comparing both average and median, only because when you're comparing average, sometimes that number skews depending on what prices of homes are selling more. So if lower price homes are selling more, average price tends to go on the lower side. If higher homes are selling more, then average price tends to go to the upside, whereas median counts the home right in the middle. So regardless of what the high and low is, whatever the median price point is the home that's right in the middle. It's not going to be skewed by an increased number of homes sold on either the higher or the lower end of the scale. So when you're looking at detached, semis, townhouses, condo towns, and condo apartments, you're seeing decreases all over, regardless of what region you're in. But for detached homes, for example, we see a big drop of 29% in Durham. So you're looking at 1.379 million dropping to 977, so under a million. Now, mind you, this doesn't mean every home dropped 30% in Durham. So you have places in Pickering, places in Ajax, and places in Whitby where you did not see a 30% decrease. You might have seen a 5, 10%, maybe 15%, but there are some areas within Durham for sure that have seen 30% or more. Remember, 30% was the average. That means some prices have dropped even more than 30%. When you're looking at the median, similar figures, but you're looking at an even more profound drop. So it drops to 925,000 instead of 977, and you're looking at 1.33 instead of 1.37. You're looking at semis, you're seeing the drops. The most decreases were in Peel, York, and Durham. And when you're looking at townhouses, you're seeing a drop of 24%, almost 25% in Durham. And when you're looking at condo towns, again, you're looking at Peel and Durham as the greatest amounts of decrease when you're looking at the average, but when you're looking at median, you see that York has the greatest median drop. And you're looking at condos. Condos have been fairly, trying to find the right word here, fairly sustained, I guess, in terms of price, because throughout all of TREB, you're only seeing a 10% drop in terms of the average price. In Toronto, you only see a 10% dip. Halton, you only saw a 4% dip. Mind you, in Peel, 15%, 13% drop. In York and Durham, 17%. So Durham across the board, the entire region, you've seen the biggest price drops. But condos relative to other property types have not seen as big of a drop. So where you're seeing 20 to 30% drops in detached homes, semis, and townhouses, you're only seeing a 5 to as high as 17%, but in Toronto, you're looking at only a 10% drop in condo prices. Now, the reason for that is quite simple. Condos remain affordable. They are at the lower price points, and so an entry-level buyer, a first-time buyer, is looking to enter the real estate market and can afford a condo, whereas semis, detaches, townhouses are a bit more pricier and out of their range. And in terms of the demand for condos, because you've got first-time buyers looking to get into the condo market, and you've got right-sizers, or anybody who is selling their big house and moving into a smaller space so that they can maintain their property, they can have a much better lifestyle and less maintenance, they're competing within the same marketplace. Now, prices for condos have gone down. And so if you're an investor, it might make sense to start number crunching, and based on what you see happening in the marketplace over the next couple of months, maybe start to take advantage of some of the discounts that are on the marketplace. Right? There will be motivated, let's call it what it is, there will be motivated sellers in the marketplace that need to sell, whether they've bought another property and need to reallocate their resources, so they have to sell this property, or maybe they're bearish now about the market in general, they don't see any hope, and so they want to literally dump the condos on the marketplace that were part of their portfolio. So there will be opportunities to negotiate purchase prices, and I am seeing a lot of those happen. And you're seeing a lot of prices right now that you wouldn't have seen, obviously, in the beginning part of this year, but you haven't seen in a while many of these discounts that are happening. So if you're an investor, this is a good opportunity to buy, provided you know what your investment horizon is in terms of your timeline, your commitment, and you better be prepared too if we continue to see price drops. So not only are condos and any investment property for that matter cash flow negative, typically speaking, they're cash flow negative, you're going to have to sustain that negative cash flow and basically weather out the timing of lower prices until things start to change. And in terms of the number of months or years before that happens, we don't know, or at least I don't know. I don't like forecasting or predicting any of that sort of thing. So I hope you found this information useful, and if you have any questions, feel free to type it into the comments section here. Make sure you subscribe to this YouTube channel if you like these updates. I take a little bit more of a casual approach to analyzing the statistics and data that's presented by our Toronto Regional Real Estate Board, and so this is something I enjoy doing so that I can share this information with you and of course provide you with some context into what's happening in our real estate market. I hope you enjoy the rest of your summer, and feel free to reach out if you have any questions whatsoever about the real estate market. Take care and bye for now.